We are live with the Senate Banking Committee right now for you guys. Let me pull it up. I'm going to get it on the screen, get everything settled. I've just kind of rushed into this, so bear with me. Getting everything set up for you right now.
We will process that application as we process all applications. And I would note that the only
talking
political
about Trump
pressure
right
I
now,
felt
they
from
just
any
got done
part of the
talking about the
United States
skinny
government,
master
Senator,
accounts.
is from you.
Well, it is pressure to follow the law. If you follow the law, you will reject the president's application. As soon as you approve that application, and we all know you're going to approve it, you go from being a cheerleader for President Trump to an accomplice in his corruption. Now, let me see if I can just get to one other problem, and that is not just doing Trump's bidding, but also doing Wall Street's bidding. We know, Vice Chair Bowman, that reducing capital cushions at mega banks increases the likelihood of crashes and taxpayer bailouts. I did some research. Turns out that your rulemaking would reduce required capital at the largest banks by more than $200 billion, or 23% for the big bank companies. I will submit a question for the record so that I don't go over, but this is entirely contrary to your own comments that you would not put our nation at risk. You are doing so.
Senator Moreno.
Thank you, Mr. Chairman. Mr. Gould, does Citibank present a national security threat to the United States of America?
Well, Senator, I won't comment on individual banks, but I'm not aware of any of our banks presenting, quote, a national security threat, but nor am I an expert in national security. We, of course, work with colleagues across the government in assessing those types of things.
But they do have 5% ownership from the UAE.
Sir, I don't know the exact ownership, but if you say so, I'm sure that's correct.
Just wanted to clarify that. Shifting gears real quick, maybe ask the four of you really quickly, starting with you, Mr. Hill, going down the line. Have you seen massive deposit flight from our banks?
No, sir.
No, sir, I have not.
No, sir.
Credit unions?
No.
Okay. No. Okay. And the Genius Act passed in August. And have the fact that some institutions offering rewards on stablecoins, does that pose an existential threat to the banking system? Mr. Hill?
I know this is a pending debate before Congress, so won't wade into that debate. But community banks and large banks alike continue to serve their customers and their communities well.
So you're not feeling an existential threat to the system now?
Again, I don't want to wade into the legislative debate, but banks continue to be performing quite well.
Okay. Mrs. Bowman?
I would agree with my colleague, Chairman Hill.
Okay. Mr. Gould?
Senator, I know there have been a range of studies purporting to show a range of outcomes around deposit flight. I, for one, cannot predict what would happen, but what I can, I think, say with some certainty is that any significant deposit flight or material deposit flight would not go unnoticed, certainly by me, by you and others, elected officials of this committee. And if there were to be significant deposit flight, I believe that I and other federal banking agency regulators would take steps since that would rise to and implicate safety and soundness concerns for the banking system.
Thank you. Robin?
As of now, there's nothing significant happening with deposit flight. I'll say that. And that stablecoins, as a general matter, anything that
went away. That's not good.
disincentivizes holding and using dollar stablecoins
do that every
would
time I
run
do this?
counter
I hope
to
not. Let's
Congress's
see.
interest. The more people who use dollar stablecoins, the lower borrowing rates are for everyone, because they're supposed to be, that's what Congress wanted, they're supposed to be dollar
Let me
buying
fix this
machines.
so it doesn't do that again. Yeah,
So,
every time I do that,
as
it
a
does.
general
Okay,
matter,
maybe that.
anything that
Okay, let me fix this real quick.
disincentivizes people to hold stablecoins would be negative for Congress's purposes
There we go.
there.
Okay. Thank you so much. Mr. Gould, if I could ask you maybe from the prior line of
This is
questioning.
the Senate Banking Committee.
Have you seen any
They just got
evidence that
done
any of my
discussing
Democratic colleagues
skinny
tried
fed
to
master
influence the
accounts
debanking of
and
law-abiding
the
citizens
Trump
during the Biden
bank charter?
administration?
So this is what we've been waiting for as far as wanting to
Thank
see
you for the
behind
question,
the
sir.
scenes.
We are still going through our process of investigating the debanking activities or alleged debanking activities of the largest national banks. It's certainly the case, I think, thanks to the good work of Chairman Hill and his disclosures around some of the instructions that the Biden era FDIC was giving to banks, that they were using reputation risk to inappropriately lean on the banks. We, of course, are taking steps by eliminating the use of reputation risk to prevent that from occurring in the future.
Well, and I guess any of the three of you can answer if you want in order. JP Morgan Chase last week admitted that it cut off 50 Trump family bank accounts because, quote, it needed to distance itself from President Trump and his conservative political views. Is that what the law requires banks to do? Is feel the political winds and debank people?
Well, without speaking about a specific bank, I'm not aware of a law that requires that.
So your job, just to be clear in the last 45 seconds here, your job at the OCC, your job at the Federal Reserve, and your job at the FDIC is to follow the law, agnostic of political views, correct?
Yes, sir.
And when political views are injected through bullying and through staffs that jump from Congress, a senator's office into a regulator and back and forth, that is the kind of undue political influence that we do not want. Is that correct?
That is correct, and we're trying to insulate our banking system from that type of activity.
And then the Federal Reserve, no more important to make certain that the Federal Reserve is an independent body free of political influence, correct?
Yes, we should be apolitical in our views and the way that we implement our financial regulations.
Just real quickly, FDIC.
Fully agree as well.
Thank you. Thank you, Mr. Chairman.
Yes, sir. Thank you. Senator Reed.
Well, thank you very much, Mr. Chairman, and thank you to the witnesses for appearing today. Mr. Gould, a condition of giving mortgages, of getting a mortgage to a bank typically requires the homeowner to set up an escrow account and pre-fund that account with a year's worth of insurance and property taxes. And laws in at least a dozen states, including Rhode Island, my state, require banks to pay consumers interest on these balances, and this is real money for my consumers. But the OCC has proposed to exempt the biggest national banks, all national banks literally, from these state laws. And that would impose, I think, a cost on many consumers. It would save money for the banks, but will you conduct an analysis of the impact on consumers in terms of the cost they must pay? It's in the line of affordability.
Well, Senator, thank you very much for the question. As you know, one of the reasons for the OCC's existence, per then Treasury Secretary Salmon Chase and President Lincoln, is to establish nationwide markets. And the hallmark of the OCC is federal preemption. Of course, that is not just a prerogative of national banks, but thanks to legislation passed in 1997 by Congress, it also extends to state banks. And so our focus is ensuring the general principle that states do not have the ability to regulate national banks. That is inconsistent with the whole reason for the OCC, inconsistent with decades and decades and decades of Supreme Court opinion. And that is why we weighed in that manner, sir. And it should come as no surprise to anyone that is the OCC's views. It has long been the OCC's views on that specific issue and beyond, sir.
My question is, have you estimated the cost to consumers? Because one of the goals, I heard a lot about this Tuesday night, was to save Americans from unnecessary costs, and you are imposing a cost on them.
Well, sir, the analysis, I think, is not that simple because I think it also impacts the availability of mortgages in those areas, including in your home state. So the level and degree of state interference in creating nationwide mortgage markets will actually interfere with the availability and the cost of mortgages going forward. So we were very intent on ensuring that there is a nationwide mortgage market.
Interesting, because the law's been on the books in Rhode Island for 50 years, and it would.
This is a
absurd to
political
claim it would
meeting.
affect access to mortgage
Yeshua,
credit.
I don't think they're
Mortgages
supposed
are
to be
cheaper
good
in Rhode
guys
Island
here.
than they are nationwide. According to bankrate.com, current mortgage rates in Rhode Island are
But for the sake of
5.79%
crypto,
for a 30-year fixed rate,
Republicans.
and the national average is 6.56%. So the Rhode Island law has no impact. In fact, it has presumably a positive impact on mortgage rates. So that is not, I think, an appropriate response. Let me turn to both Ms. Bowman, Chair Bowman, and Mr. Gould. I think you'd both agree that regulators must penalize banks when they violate the law, and that these violations occur constantly. That's what's surprising because in the last several months, the Fed has lifted 12 consent decrees against globally systemic important banks. This includes foreign domestic banks that have
People wearing
facilitated
blue
mass
are not pro
tax
crypto
evasion,
usually.
accounts
least
for
in
the
these-
RAN,
these
et
meetings,
cetera.
Yeshua.
And then consumer gold. Since your confirmation, the OC has lifted 2 actions against systemically important banks and 3 actions against crypto-focused banks. I don't find it plausible that suddenly these banks have become models of acceptability, et cetera. It seems as if you're just weakening the enforcement powers. Madam Bowman?
Well, Senator Reed, thank you for that question. It's important to understand that these enforcement actions and
So
any
red
MRAs
means
have been in place
good.
for a number of years, and that we've been working diligently with those institutions to help them understand under what condition we would consider lifting any enforcement action or MRA. And so if we have lifted any particular actions, it's because over a long period of time, those institutions have acted in a way that allowed us to understand that they have mitigated those circumstances. We've verified that with their internal audit, and that has resulted in lifting particular actions.
Well, one consent order was imposed in 2024.
Such
that's
is life,
18 months
AC.
ago. And that seems to be a rapid time for most of these large financial institutions to suddenly do the right thing.
Well, I appreciate that, and I'd like to look into that a little bit more.
Thank you very much. Thank you. Thank you, Mr. Chairman.
You're welcome. Just to follow up on Senator Moreno's question as it relates to deposit growth or decline after the implementation of the Genius Act, and my great staff did some research pretty quickly to recognize the fact that the fourth quarter, we saw deposits increase even after the implementation in August. And
look
the
at that.
expectation over a 12-month period from the bankers themselves is that there will be further increases in deposits. So the fear of deposit flight does not seem to be realized whatsoever. So that really, from my perspective, is good news, because what Kyle made a really good point that, in fact, everything that encourages more dollar use is not only good for the economy, it's good for our reserve currency status in the world, is something we should all lean into. So I think that's really important. I'd also like to note that Chairwoman Bowman has done a really good job, and I'm excited, frankly, about the opportunity to see a reproposal on Basel endgame by the end of March, which feels very, very soon. And I am thankful that the 4 of you all have been working together.
New proposal by the
in
end
a
of March.
fashion to bring to us and, frankly, to the market new information, because capital has been increasing for the last several years, and we've always heard over and over again, we have about what we need, but then it goes up some more, and then we have about what we need, and then it goes up some more. And so my hope is that we'll have a real strong Basel III endgame proposal, and that the market will celebrate it. I know that I will celebrate any changes in the right direction from my perspective, so that's great news. I think we must ensure that capital requirements do not prevent families from accessing the credit they need to buy a home. As we all are very aware of the fact that the average age for first-time home buyers is at 40 years old. And that is devastating to so many Americans. For so many of us, the American dream we see in our future as we are growing up is
Home
ownership.
affordability.
Homeownership is the equity position that we really want in America, and everything we can do to make that available and accessible for those who are credit worthy, I think we're heading in the right direction. And so we have worked on this committee in a bipartisan fashion on the road to housing legislation that passed through this committee unanimously and through the Senate unanimously. A road to housing is meant to expand housing supply, but to help spur demand at the same time. Can you elaborate, Chairwoman, on any efforts that you see? You talked about making it easier for community banks to get back into the mortgage business. I'd love to hear you elaborate on that topic a little bit more.
Thank you, Senator Scott. As you know, my initial banking experience was as a community banker in my family's over 120-year-old community bank. So one of our core businesses was real estate lending for consumers. And as a result of the Dodd-Frank regulations and the CFPB regulations that were also put in place, it became very difficult for us to change the way that we did real estate lending to ensure that we were in compliance. I heard, as I was the bank commissioner in Kansas, similar stories across the country from other bank commissioners as well, that many community banks had exited that business. And it is certainly devastating for consumers in those areas to not have a relationship with their lender. So we're very focused as we were thinking about the Basel approach in ways that we could right-size and recalibrate the approach for residential mortgage lending so that we could encourage the banks to get back into the mortgage business, since it had nearly, significantly shifted to the non-bank mortgage origination space. So I gave a speech about that last week. I think
Yes.
that's what you're referring to.
Indeed.
I think there are other areas that need to be addressed as well, and I think they're part of, as I mentioned in that speech, CFPB regulations that put onerous requirements and large fines on banks for making mistakes in mortgage applications and things like that. So I
This
think
is
it's
the boring part. They need to get back to
important
talk
that we
about
think
crypto
this
again.
in a more broad manner and a holistic
Senator
way as we
Warren went
approach
off
thinking
on
about
Trump.
banks getting back into the mortgage space.
I appreciate that. I like to hold all senators, including myself, to a 5-minute threshold so that we can make sure everybody gets the opportunity to ask questions. So I'll ask a question anyways. So something like a public hypocrisy. You both, Chairwoman and Chairman Hill, you both have done a really good job on the indexing issue that I'm very interested in as we think about systemic risk. I hope that we recognize that as our institutions get larger, that systemic risk should be indexed to reflect reality in our economy. Can I count on both of you to continue your work on the indexing conversation?
Absolutely.
Senator, we are engaging very deeply in this space and appreciated your comments about nominal GDP as the benchmark for indexing, and we will be hopefully proposing some changes to the asset thresholds and other areas where we can tailor the way that we approach regulation and apply it.
I now have to offer all the members an extra 6 seconds to make up for my 33. Thank you. Senator Van Hollen.
Thank you, Mr. Chairman. Mr. Gould, you serve at the pleasure of the president, right? And as Senator Warren mentioned just a few weeks ago, the Trump family crypto company, World Liberty Financial, applied to you, the OCC, for a national trust bank charter. Now, such a charter would help the company expand its digital asset business, right?
Senator, I'm not going to comment on the specific application or how they might use that charter going forward.
All right, let me ask you this.
Public section.
Is there any precedent that you know of where a business, a company in which the President of the United States or members of his family had an interest in was applying to the OCC for approval of any kind of application?
Sir, I have not looked, but I will say that our licensing process, including our chartering process, is designed and administered by superb professionals.
Mr. Gould, it was a very simple question. You don't know of any precedent where the
I
President of
have
the United
not
States had
looked,
an
sir.
interest? Okay.
I have not looked, sir.
We've looked, we couldn't find any. That's why I wanted to ask you. And isn't it true that if you were to deny this application, the president could fire you?
Senator, if you're suggesting that the president would do anything inappropriate or illegal, then I reject
Oh,
that
I am
assertion.
suggesting that actually, because I want to talk about this company. And I'm not going to ask you about the review process you will go through, but I do want to ask you if you're familiar with some of the facts behind World Liberty Financial, because it has been at the center of one of the most corrupt schemes that we've witnessed during this administration. Here's what we know about World Liberty. 4 days before Donald Trump's inauguration, the brother of the leader of the UAE, the brother is known as Sheikh Tahoon, who's also a critical player within the UAE royal family made a $500 million investment into World Liberty. Were you aware of that fact?
Senator, again, I have not read all the newspaper allegations, but we process applications in a fair and even-handed manner.
I just want to know. I want to know if you're aware of that fact. I guess the answer is you're not.
Senator, again, I would be happy to explain to you how the licensing process at the OCC works.
What I'm going to try to get at is whether or not if a company like World Liberty Financial has a corrupt origin, whether that factors into your decision making. Let me just ask you this question. Because after that $500 million investment 4 days before the inauguration, the president's son, Eric Trump, went to the UAE. And at that time, one of Sheikh Tahoon's companies made a $2 billion investment into World Liberty Financial, which dramatically boosted the value of the Trump family business. Were you aware of that fact?
Senator, again, like this committee, the OCC is returning to regular order. And so the procedures by which and the diligence we do associated with any application for a charter is laid out and set forth in our 131-page Comptroller's licensing manual.
Mr. Gould, let's make this point. The president came in and fired the heads of or participants in many commissions because he disagreed with them. So we know what the president will do or is likely to do. And I do think it's important that people understand the sort of corrupt origins of this, because what happened was that after Eric Trump went to the UAE and Sheikh Tahoon's company pumped $2 billion more into the Trump family crypto business, President Trump went to the UAE. It was one of his very first overseas stops. And just before he did, he lifted the restrictions the United States has on the transfer of very high-end AI chips technology that had been in place with respect to the UAE. Restrictions that have been put in place because of bipartisan concern that the company that is run by Sheikh Tahoon, G42, would divert that technology to China. I'm not going to ask you again because it sounds like you're not aware of all of this, although it's been very well documented. So my question to you is, as you look at this whole scheme, where it's clear that the President of the United States relaxed restrictions on the transfer of high-end technology to this UAE company right after a different UAE company run by the Sheikh Tahoon invested $2 billion into World Financial. Does any of that background play and factor into your decisions?
Luckily, they only get
that you'll
5
face?
minutes each.
Senator, so the background and factors that we considered are detailed at length in the 131-page Comptroller's licensing manual, which I would suggest that you all read because I know you're concerned about this issue.
Thank you.
Thank you.
Next will be Senator Tillis, but before he goes, we're going to take a 20-second recess, so to speak, to set up a podium. Now, let's knock it out.
20-second recess, huh?
I've always wanted to see how tall Travis was, so this is an opportunity for me to figure that out right now. He is actually taller than I thought he was. Senator Tillis,
They
the floor
are
is yours.
hammering hard on World Liberty Financial. That's a big hold up
And
for the Democrats
just
in the
a
banking committee.
parliamentary inquiry before I start using my time.
Yes, sir.
What's the purpose of the podium?
He has a bad back.
Got it. I'm sure everybody was asking. I just needed to know. Thank you, Travis.
Appreciate the understanding.
I think we should
I
have a
tried to
stand-up
cover it
desk
up.
down there. To be honest with you, you all have to sit for so long.
I tried to cover it up, but it didn't work.
That'll take away the intrigue from the press. Governor Bowman, how are you doing?
Africa?
I'm well, thank you. How are you doing?
I'm doing pretty good. Actually, I've got some questions that I may submit for the record. The staff have prepared some good questions, but more of a general question for the regulators here, the ones who are in play. What have we learned and how we have applied those lessons to the Silicon Valley Bank, what I think was an examination failure? In other words, we had to have done an after action. We know that there were multiple matters requiring attention and multiple matters requiring immediate attention. It should have been a dashboard like blaring in the C-suite and at the San Francisco Fed. What have we learned from that, and how are we applying things to any of the regulators who want to opine?
Senator, I might start, if that's all right. So we've recently launched an external review of the Silicon Valley Bank failures using an independent third party so that we can learn from an external independent review of the activities that were undertaken within our supervisory responsibilities and how we missed the financial vulnerabilities at Silicon Valley Bank that manifested in its failure.
How long ago was that?
The failure was 2023.
Yeah. I wonder why it's taken so long to get to an external review.
I think I'm the only one that was interested in embarking upon one.
Yeah, and why would that be? I mean, it seems like there's so much. We know the bank activities at SVB were very different, but why wouldn't there have been an interest long before 3 years later? I mean, to learn from that, we should be applying the lessons now versus trying to determine them. Do you agree with that?
I agree with that.
Yeah. Tell me a little bit about in your position. Randy Quarles had some great ideas. We made some progress on some. We didn't make progress on others. What's your agenda if we start getting to really pressing on regulatory reform, right-sized regulations in your capacity?
What we're doing at the moment is focusing on material financial risks. I think that's one big lesson that we learned from the failure of Silicon Valley Bank, that we were distracted by other non-material issues. And there were actually 40 MRAs that were issued that were not related to financial issues for Silicon Valley Bank. I think that's a demonstration that we were focused on the wrong things. So we're refocusing our supervision in a laser focus on material financial risks to ensure that Silicon Valley Bank doesn't occur again.
Yeah, this is a bit out, maybe a bit outside of your lanes, but how could that not be looked as an examination and supervisory failure? And if you agree with that premise, then why haven't we seen any changes in personnel for people who are responsible for that at the Fed?
Well, actually, we have a significant number of people who have left the organization. Many of them were involved in that supervision.
At the highest levels?
At the highest levels.
Good to know. If we could get for the record that which is publicly available, that'd be very helpful to me. I've heard a few exits, but it seemed like a systemic problem there. And when you have systemic problems, you have to systematically go up the chain and eliminate people that I personally think were asleep at the switch. I guess the last question I have for you has to do with some of the work, the primary drivers of declining bank participation in mortgage origination and servicing markets. Give me your idea on how we fix that, what the drivers are and how we fix it.
I think the drivers have been, as I mentioned in a speech about a week ago before the ABA Community Banking Conference, the risk weightings that were applied from the Basel agreements on mortgage origination activity as well as mortgage servicing activity. That pushed a lot of the activity outside of the banking system into the outside of the regulatory perimeter. So we are proposing together with the OCC and the FDIC one part of the Basel capital requirements will address those risks and better calibrate them to ensure, one, that we provide appropriate risk weighting for that to ensure that we don't have the excesses that existed during the financial crisis in the aughts, but also so that we can encourage banks to get back into that business.
And I'm about to run out of time, so I'll submit other questions for the record. But I am working with the White House and with members on the committee on trying to resolve the final steps so that we can get to a market structure or market formation bill for crypto. And the one thing that I still have not been able to find much analysis on, except for that which was commissioned by various stakeholders, is to what extent we really do have a deposit migration risk if we don't get this right. So we may also submit some questions for the record for appropriate people to point me to a definitive resource. I'm not one of these guys that sees a risk spread and doesn't try to figure out how to create strategies for dealing with the risks, as they've been expressed by community banks and GSIB. So I'll be looking for some help there. I just need some independent assessment on there for us to be able to move forward. Thank you, and Travis, I hope you get back gets better.
So systemic
Senator
deposit
Cortez-Masto.
flight risk, not a thing.
Thank you, Chairman. Thank you all four of you for
And
being
yes,
here.
surprise live
Let me
stream today.
just,
I was watching this and I'm like, you know what? Let me
start,
go live. I'm sure other people
my
might want to
Vice
watch it.
Chair Bowman, by saying
the
the
Senate
mortgage
Banking
servicing
Committee, if you
area
didn't
that
know.
you're focused on. I'm very curious about. as the Attorney General during the financial crisis. It was a failure on not all of you, but your agencies. It was a failure by Countrywide. It was a failure by the banks. It was a failure all around. And the people that suffered the most were the American public. So whatever you're doing on the servicing side of that, I would be happily working with you to engage to make sure we get it right.
I look forward to your review of the provisions that we've included in, and that we will publish by the end of March, and I look forward to discussing that with you.
Thank you. So let me talk about something that has just come up in the Wall Street Journal. It recently reported that President Trump is considering requiring banks to collect citizenship information from new
I'll be right back.
and existing customers. The current Know Your Customer rules do not require financial institutions to specifically gather citizenship status, nor do banks routinely share this information with the federal government. So let me start with Chair Hopman. Let me ask you this question. How will requiring people to provide a passport or birth certificate to open a bank account, how will that affect their access to a safe and reliable place to store their money?
Regarding citizenship, we are not there yet. I don't believe anybody's contacted me about it, but we're going to follow all the KYC stuff. I tell you, when it comes to opening accounts, though, there are bigger obstacles out there on KYC. The AML regime is perhaps something.
That's not my question. My
Yeah, I know.
question is right now, if we are requiring, if this is implemented like the Wall Street Journal says, the administration is looking at it, my question to you is how will requiring individuals to provide passports or birth certificates just to open an account, how is that going to impact their ability to now have safe, reliable money in a bank? Will it impact the banks at all? Will it have an impact at all? Will people still put their money in? That's my question.
Yeah, it strikes me as a hypothetical, but we'll certainly deal with anything that comes down the pike, EOs or bills or what have you.
All right, Mr. Gould, Comptroller Gould.
Well, KYC requirements already impose obligations on banks to collect any pieces of any number of.
No, I know that, but not birth certificates, not passports. So
Meaning
by
like the
requiring-
I-9? Are you referring
I'm
to the
talking about
I-9?
to open a bank account,
Right.
requiring a birth certificate or a passport,
you're asking
and
me
then
any
sharing that
additional
information. It's very simple.
I think the
just-
additional burden
yes or
would
no,
be
is it gonna
minor.
burden?
Employers have to collect I-9 information, which includes that information to legally
And what if
employ
a senior,
folks
what
in
if
this
somebody
country.
doesn't have that? What if somebody doesn't have a passport or birth certificate? They're not going to be able to open a bank account?
Well, Senator, just like with an I-9, I think there are alternatives available. Banks have demonstrated an ability to find ways to know their customer under the existing framework.
Not if they're mandated to require birth certificates and passports. Are you telling me if there's a piece of legislation or supervision or requirement by the administration that banks have now mandated to provide that information, they can get around it?
I'm responding to your question about to what extent it's a burden to collect additional information as part of the KYC process.
Yeah, I understand that. Sure.
Well, thank you,
Yeah.
Senator Cortez Masto. It was a pleasure to visit with you in your office last week. Thank you for taking the time. I do want to say that this is a matter for the administration. I don't think they've yet put something in place to require this, and certainly we'll reserve judgment until there's something final for us to comment on.
Okay. Chairman Hill?
Likewise, I think the article made clear that unless or until something is announced by the White House, this is just speculation. And so, like Vice Chair Bowman, I think we stand ready to implement new procedures if they come out. But at this point, nothing has been issued.
Are you any of you hearing from financial institutions concerns about this policy if it's implemented? Curious. Has any of the institutions reached out to you and said, "Oh, I read this in the Wall Street Journal. I'm concerned about this," Chairman?
No one has reached out to me on it.
No.
I have not heard anything.
I have not heard anything either.
I have not. It's usually other regulatory issues that come up.
Okay, thank you. So I want to talk a little bit about cyber risk and IT operational failures. I am alarmed by the recent stories that more than half of U.S. banks delayed or scaled back a key payment project in the past year due to a deficit in internal expertise. Since 2023, the top 9 banks faced 33 days of unplanned outages. As disruptive as these outages are, there's a potential more significant risk of a cyber attack by a state actor exploiting vulnerabilities in the outdated system. Does the analysis by bank examiners include an assessment of cyber vulnerability? And I would just ask you to say yes or no very quickly because I'm running out of time.
We examine for cybersecurity and readiness.
Thank you.
So it should.
As do we.
Okay.
Same here.
Thank you. Thank you, Mr. Chairman.
Yes, ma'am. Senator Britt?
Thank you, Mr. Chairman. Thank you all for being here. Certainly appreciate what you're doing to restore accountability and credibility to the agencies that you lead. I'm going to start with Mr. Hill and Mr. Gould. I know that your agencies are conducting rulemaking to revise the flawed MRA process. I obviously wrote a letter, and I appreciate your attention to this. I think when we look back, we've heard a lot today about SVB, what could have happened. We know there were over 35 outstanding MRAs in that case. We need to make sure that when we do this, that it matters, and it's something that people respond to. So I appreciate your efforts, and I wanted to see, do you have any kind of update for me on that?
Sure. So the comment period closed at the end of December. We have been working to go through the comments. We've been engaged with the OCC on moving forward with the final rule. Meanwhile, we have been doing a lot internally at the FDIC. We did begin a process to start going through all of our outstanding. We currently call them matters requiring board attention and other supervisory recommendations. To begin the process of closing out those that don't align with the new approach.
We do get it from time to
That's going
time.
to
We're
be
getting
a
slivers.
bit of an
Couple good
iterative
sound
process
bites.
as we move to a final rule, but that process is underway. And meanwhile, we are working on starting to roll out training for our examiners to make sure that the full workforce understands the new approach and that it's being applied consistently across the board.
Okay, thank you, Mr. Gould.
A similar approach and status at the OCC.
Okay, excellent. I'm going to stay with you all, and I'm going to add Mr. Hopman as well. You were all involved in 2155 and the narrowly tailoring that was necessary to allow financial institutions to continue to grow and expand and make sure that we are properly placing regulations and not just looking at size as some type of blunt force object, but rather, looking at this and making sure that we're creating an opportunity for growth and thriving. And I guess my question to you all is that, would you say that a bank, maybe $100 billion bank, you're looking at all the different sizes, or we'll just even say $1 billion bank should be treated differently than a $700 billion bank?
Size is certainly an issue, but as an insurer, I can tell you, we definitely don't want them to be similar. As an insurer, you want very different business models.
Excellent.
Yes.
Okay, great. Mr. Hill?
Certainly.
Excellent. As you know, we continue to see these banks grow and evolve, and we want to make sure that we modernize these regulations so that they include, they don't have these static thresholds that we're seeing. Senator Cruz and I actually just introduced a bill on that to index the $10 billion threshold in the Durbin Amendment so that institutions that were never intended to be subject to that rule are not subject to that rule. So I hope that we look at these outdated thresholds and we make sure that they make sense in today's current environment. I think I heard you talk about prudential standards, Chair Scott, and so definitely agree with that as well. In addition to indexing, risk weights, also incredibly important to calibrate. I hope you're considering all of this with your Basel III rulemaking. And Vice Chair Bowman, you and I have had conversations about this. As we continue, though, to discuss affordability and home ownership, I heard you talking with Senator Tillis about the mortgage rate, risk weight, and so that is something that you all have taken into consideration as you've made this Basel III more palatable and a way that we can actually absorb it.
Yes.
Okay. Also, have you taken a look at hedging cost for farmers and what that happens with the agriculture community as a result of the previous administration? We heard a lot about the negative impacts that would have. Have you taken that into account?
Senator Britt, I share your concerns about the agriculture community and their feedback on the previous proposals. And yes, we have taken that feedback into consideration.
Wonderful. And among other troubling provisions in the last administration's Basel proposal that would have reduced credit capacity around, I think, about $150 billion per year and negatively impacted GDP growth. Are you all, as you revise this rule, fully considering the broader economic impact, including the price of credit and anything with regards to GDP?
Yes, you'll see when the when the proposal is published, that we have an extensive economic analysis that's included with the proposal.
Okay. Everybody? Yeah. Thank you. Appreciate it.
Senator Smith.
Thank you, Mr. Chair, Ranking Member. Welcome, everybody. I'd like to start with the Community Reinvestment Act, and I'll direct these questions to you, Vice Chair Bowman. So the Community Reinvestment Act is a crucial tool for making sure that financial institutions are actually providing credit in communities, especially underserved communities. It's so that people can afford to buy a house or can have access to credit to buy a house, small business, community development. And the last time the regulations for the CRA was updated was in, I think, 1995. And since then, everything is so different than it was in 1995. I won't go through the whole history of the work that was done to update these regulations. I think it's fair to say that in Minnesota, most financial institutions, regardless of what kind they were, said we really do need an update to this. FDIC, the Fed, and OCC finally proposed a new rule, 2023. It was a big deal. Rule goes into effect. And then the big banks filed a lawsuit challenging the rule in a district, honestly, that was favorable. And your agencies decided not to defend that new rule. And so now we have reverted back, as I understand it, to the 1995 regulations. So, Vice Chair Bowman, can you tell us what is the status of this rescission, proposed rescission of the 2023 rule, and what do you see happening next here?
Actually, my colleague, Michael Barr, Governor Barr, is responsible for the CRA work at the Federal Reserve. But I can tell you that the Federal Reserve joined with the OCC and FDIC in a proposal to rescind that rule and to revert back to the 1995 the existing regulations at the time. I think my view on this CRA proposal is clear. It was overly broad and excessively burdensome, especially for community banks. It would have treated a $2 billion bank in the same way that a $2 trillion bank was required to comply. So I was not able to support it when it was introduced in the last administration.
But so my question is so what happens now? So right now we're back to these 30-year-old regulations that predates online banking. Is that the best that we can do, or where do we go from here?
I think there have been a number of efforts to modernize the CRA. The OCC tried during the Trump administration. It was rescinded by his successor. This rule was, as I said, clearly overly broad and violated the law in many areas and would have created excessive burden for community institutions in particular. So I think that it's an important aspect, and serving the community and providing access to financial services is critically important, but we have to do it in a reasonable and measured way.
Well, right, Mr. Gold, let me ask you this question. The OCC has provided some guidance to simplify how banks can use the strategic plan option for their CRA performance evaluations, and that includes options to make it easier for banks to submit online. Kind of makes sense. But at the same time, as far as I know, there's no plan to update the way that the public can provide feedback on these strategic plans. I think right now it still involves bank posting notice in the back of newspapers. So, Mr. Gould, could the OCC agree to post draft strategic plans on on your website so that the public could review them, and encourage banks to post those draft plans as well online so people can see them?
I'd be happy to explore that with my legal team. Just to add to the Vice Chair's points, we now have two successive administrations from different parties that have tried and failed to update, as you say, the 1995 regulatory framework, which, as you correctly note, is outdated. But we've got two successive administrations that tried and failed. One of the things we were trying to do at the OCC, as you point out, is we are trying through the examination process and through, for example, introducing kind of creative ideas like a CRA simplified strategic plan that mesh with the current regulatory framework to find ways to target and make more effective CRA compliance, particularly for, again, as the Vice Chairman noted, for community banks.
Well, I'm a strong supporter of community banks, and I want to make sure that they aren't overly burdened as well. I think that I'd like you to get back to me on this question of whether we can at least make it possible so that people who want to know what these draft strategic plans are can find them without having to go through a bunch of, that would be a pretty simple thing to do to modernize how information can be provided. So I'll follow up with you on that to make sure that we can at least make that bit of headway. My view is that this Community Reinvestment Act is a really important way to make sure that we address one of the underlying challenges that a lot of people have, which is they don't have good access to lending. And so I would ask that we can work to make some headway on this. Thank you, Mr. Chair.
Senator Haggerty.
Thank you, Mr. Chairman. I'll start with you, Vice Chair Bowman, on one of my favorite topics, the Basel Committee. It's headquartered in Europe, as we know, and it's dominated by European regulators. The European Commission has formal representation on the committee. The United States does not. Think about what that means. It means that we allow Basel standards to be treated as constraints on U.S. regulators, and if we allow that, I think we're effectively outsourcing our regulatory responsibilities to the Europeans. We're allowing foreign bureaucrats to dictate the rules that govern American banks, American credit markets, and ultimately the American economy. So, Governor Bowman, I'd like to ask you, as you approach the Basel implementation, what governance is in place right now to make certain that our financial regulation represents the views of the United States?
That's an excellent question, Senator Haggerty, and I appreciate that you've brought this up in this environment especially. As you know, the Basel Committee operates as a member-driven international standard-setting body for banks. It was created in 1930 as a way to manage World War I reparations, so it's long outlived its original intent. Its legitimacy, in my mind, depends on transparent governance and balanced
This is the Senate Banking Committee
representation
live.
among its participants and the participating jurisdictions. Public confidence in global standards is achieved only when they are established through transparent processes and when no single jurisdiction dominates how these standards are written and how they're implemented. We have long had growing governance concerns about the Basel Committee in the last 7 years, several years especially, but actions have been taken that are inconsistent with its public charter and its internal organizational rules. We've observed a growing concentration and reduced rotation of leadership across jurisdictions despite the committee's own standard of geographic and institutional balance. So these are a number of things that I brought to the attention of the Basel leadership and discussions that we have that are ongoing to ensure that there is representation, since the U.S. has the largest number of banks that are active in the global community, and these are the ones that are targeted for oversight by the Basel Committee.
Yeah, indeed. I think American banks should actually be that the banking rules for our banks should be constructed here by the American Congress, not outsourced to some bureaucratic committee in Basel. Turn now to liquidity. If you think about the liquidity requirements in the United States, they've become increasingly rigid and increasingly overly prescriptive. The assumption of omniscience is worrisome, as it incentivizes banks with a dramatically wide range of institutional risk to adopt this one-size-fits-all type of framework. I'm concerned that we have forced an outsourcing of what used to be and should be a thoughtful and bank-specific approach. A right-sizing of these rules can meaningfully improve financial stability and expand credit availability to American households. So, Governor Bowman, can you explain why this is important and why you commit to advancing meaningful liquidity reform?
There are a number of reasons that we need to revisit our liquidity rules, and that's something that we are working on currently, and we'll be doing that in an interagency construct. We look forward to thinking deeply about the importance of the discount window and other areas of liquidity that we can enhance and ensure that they're calibrated appropriately.
Got it. Chairman Hill, Comptroller Gould, I presume you also would agree that we need to work on liquidity. Appreciate that commitment.
Yes, sir.
I'd like to turn to you now, Comptroller Gould. My bill, the Genius Act, was signed by President Trump recently. It directs the OCC to play an integral role in establishing the regulatory and supervisory framework for payment stablecoins. Do you feel that there are any additional tools that you would need that aren't granted through the Genius Act, tools that you would need to build and enact the framework?
Sir, we proposed, in large measure, our piece of the Genius Act implementation yesterday. We are very excited to have hit that milestone, and we look forward to comments on it. But at this point, I'm not aware that we need additional tools, but of course, we have put out a proposal, and so we welcome feedback from, obviously, the members of this committee that were the authors of the law, and the public at large, too. So throughout the proposal and comment process, if we feel like we need something else, we would of course alert you all.
And one thing I want to make sure is that you have the tools, that your existing authorities are actually sufficient for you to assess any risk to potential shifts of bank deposits that would take that outside of the banking system.
Yes, sir. And again, in the proposal, which I would emphasize is just a proposal, and I'm sure can be improved and will be improved, but I believe that we have introduced and proposed measures in there that would address some of the concerns that we have heard throughout this process.
Got it. If I might just
Moving
take 30
forward,
seconds
that's
more,
good.
Mr. Chairman.
Sure.
Just one final topic. And that has to do with the work that's underway to restore de novo bank formation. I think you know in the previous administration it essentially came to a halt. And finally, the FDIC data released this week shows that the Deposit Insurance Fund grew another $3.7 billion in the third quarter. That brings the reserve ratio even further beyond its statutory minimum. And as Secretary Besson explained in the hearing room recently, the case for targeted reform is clear. I look forward to working with you all to implement a targeted expansion of deposit insurance coverage for non-interest-bearing transaction accounts.
Senator Kim.
Thank you, Chairman. Thank you to the four of you for coming on out here today. Comptroller Gold, I just want to start with you. You answered a number of questions about Royal Liberty Financial. You referenced, the review of national bank charter process. It's a fair process. A manual about 131 pages that you were citing. I guess I just wanted to ask here, is there a formal policy at the OCC requiring enhanced scrutiny when a foreign state official is involved that could very well undermine U.S. national security priorities? I just want to hear from you just what is in process and what is formal right now.
Sir, I think in accordance with our existing licensee policies, we would pursue a risk-based approach around this. So I would refer you to that, and I'd be happy to look at it and get back to you. I know you've, I think, sent some recent letters to me on that, so happy to follow up with you.
I would like to follow up. Just from my knowledge, does the staff that reviews the national bank charter process, do they have top secret security clearance and access to intelligence analysis?
So there are some officials within the OCC who do. I would be happy to get back to you on where they sit precisely within the agency, but I would note that the licensing process around charters is a kind of cross-disciplinary exercise that involves not just individuals within the licensing group or chartering organization and structure group, it's called, but also individuals from legal and individuals from supervision.
I guess I'm just trying to get a sense of, does it interact with the intelligence community? Like, do you yourself hold a top secret clearance?
I do, yes, sir.
Okay. Well, if you don't mind, I would want to send you some documents to be able to review, given just the nature of what's here. So I just ask you now, will you commit, if I flag some documentation about G42, about their connections that we've seen when it comes to China and technology, will you commit to reviewing that intelligence?
If it's relevant to the licensing process, yes.
Okay, thank you. Mr. Hill, Chairman Hill, I guess I want to just turn to you here. We have had conversations about the Bank Secrecy Act, talked about our mutual support for this. Does that still stand?
Yes, sir.
And ensuring bank compliance with the BSA is a top supervisory priority for the FDIC. Is that correct?
Yes, we also are working hard with the Treasury Department and the other banking agencies on a number of reforms to the Bank Secrecy Act program. But throughout that process, the overall objectives will remain the same.
The FDIC's own IG last year released a statement, said, quote, "It's important for the FDIC to ensure that it has examination processes and examiners with the requisite skills to assess financial crimes and sanctions, risk posed by banks, third-party affiliations." Do you agree with that assessment?
Yes.
I guess I just want to ask you, when we've seen large number of staffing cuts at the FDIC, I think upwards of 1,300 employees. Do you know how many of those 1,300 employees terminated at FDIC worked on BSA, AML supervisory issues?
I don't, but I suspect the number would be very small, but can get back to you on that.
Yeah, if you can get back to me, because I guess what I'm just trying to figure out here is, do we have more or less examiners assigned to BSA, AML now compared with a year ago before the staffing cuts. Do you know that off the top of your head?
I don't, but I would say just as a general matter, the number of reductions to safety and soundness examiners, which I would include financial crimes in that broader rubric, was very small. That was not an area that we generally targeted for reductions.
Well, look, I want to make sure that and I'm hoping to continue to get your support to make sure we are staying strong on this, given the amount of challenges and threats we face. So will you commit to following up with me on that?
Yes.
Vice Chair Bowman, I just wanted to turn to you. Two of your colleagues, Chair Powell and Governor Lisa Cook, are facing investigations or litigation. Are you concerned about the impact that this has on the credibility of the federal?
Lost his mic. That's not the stream.
Investigations.
There it
I'm just
goes.
asking you, as a current Fed governor.
Their stream's messing up. Not our stream, it's their
I can
stream.
assure you that I think the independence of the Federal Reserve is of utmost importance, but along with that independence comes the responsibility for accountability and transparency.
I agree with that. I think it's important that there's accountability, but you will say, as you just did, the independence of the Federal Reserve is important, correct?
It's critically important.
Thank you. And with that, I yield back.
Thank you, sir. Senator Ricketts.
Thank you very much, and thank you to all of our witnesses for being here today.
So I'm just going to turn it down real quick because we have to weed through all this boring crap to get a few snippets of what we are actually wanting to see is, about the market structure bill. So we'll get there. It just takes a little time.
Main Street retailers, for many Nebraska families, they're the institution that helps them get a mortgage or a home construction loan or refinancing. And these institutions know their borrowers. They're personally, connected to them and have a relationship-based model that continues for the life of the loan. So escrow questions, hardship requests, refinancing conversations are all handled locally, not at some distant call center. And under the current risk-based capital framework applicable to non-advanced approaches banks, mortgage servicing assets are subject to a 25% aggregate cap in the calculation of core capital. The dollar-for-dollar capital charge above the 25% cap forces banks that maintain bigger mortgage operations to incur severe punitive charges or sell off MSAs, meaning that they could have to cut existing valuable customer service relationships or turn away new customers in their communities. Chairman Hill, how much weight should be given to the impact that capital rules may have on the ability of smaller insured institutions to compete or retain servicing?
Senator, I think it's a major factor, and as a result, it's something that the banking agencies have been looking very closely at. Vice Chair Bowman spoke a couple weeks ago and spoke very eloquently about the importance of banks being able to provide those functions with their customers, and so that's something that we plan to include as part of our capital proposals next month.
Great. Well, thank you very much. I appreciate that. And Vice Chair Bowman, thank you for your focus on the thoughtful regulatory tailoring and your engagement to revisit the Basel III endgame. You've consistently emphasized that capital standards should be strong, but also appropriately calibrated to the size and complexity of the institution. And I know you've talked about this a little bit already, but in the case of community banks, in the case of a community bank that is well capitalized under the Community Bank Leverage Ratio framework, can the MSA cap be further tailored in a way that remains fully consistent with safety and soundness?
I think once we have introduced the Basel proposal, we can certainly have a conversation about whether or not it achieves the desired goal, and we would be happy, I'm sure all three of us would be happy to engage in that conversation.
And help me out, how long do you think that before you get that proposal?
So we'll have it introduced before the end of March.
Right.
Ideally.
Great, thank you.
I don't want to get ahead of it. Our plan is to have it introduced.
End of March-ish is what I heard there. Okay.
Thank you.
Raising the cap for MSA helps ensure that a more orderly and liquid MSA market for all participants and can bring more stability in the single family mortgage marketplace. And that's obviously one of the goals of our committee here is to be able to do that. So thank you, Chairman Bowman, Chairman Hill, and Comptroller Gold. I appreciate your engagement on this issue and look forward to continuing to work with you on your staff on this. Chairman Hill, the FDIC oversees the chartering and supervision of industrial loan companies. At the end of President Trump's first term, the FDIC finalized significant revisions to the ILC regulatory framework. Those reforms strengthened parent company oversight and enhanced reporting requirements. Chairman Hill, for banks that have been chartered under those new regulations, would you assess that those regulations have been serving their intended purpose and improving the safety and soundness of the ILC sector?
Thanks for the question, Senator. Historically, ILCs have generally been subject to higher supervisory standards than other IDIs, and they also have typically been required to enter into agreements with their parent companies that require the parents to serve as a source of strength. The 2020 rule codified some of those historical practices from the FDIC, and it's a mechanism to ensure that ILCs, which are not subject to consolidated supervision at the parent level, are still operating in a safe and sound manner.
All right, so do you think that it's having the reforms are having their intended effect?
Yes.
Okay. Thank you very much, Chairman Hill. Thank you, Mr. Chairman. I yield back.
Thank you, Senator Warnock.
Thank you very much, Chair Scott. We are 1 year out from the Trump administration gutting the Consumer Financial Protection Bureau, the CFPB. The CFPB is the only federal agency solely dedicated to protecting Americans' wallets and pocketbooks from scammers and predatory companies and financial services. But the CFPB is not just a consumer watchdog, it's also responsible for enforcing consumer protection laws for banks that have more than $10 billion in assets. This includes the biggest retail banks in the country, including banks that millions of Americans rely on, like Wells Fargo or Bank of America.
Care about
Vice
Wells
Chair
Fargo. Bring up crypto.
Bowman, yes or no? Does the Federal Reserve supervise community banks, banks with less than $10 billion in assets for compliance with federal consumer protection laws?
Yes, Senator, we do. Up until last spring, I was responsible for overseeing those activities.
So the answer is
I'm
yes.
very familiar with them, yes.
What about the biggest banks, banks like Wells Fargo or Banks of America, banks with more than $10 billion?
Yes, there are certain consumer compliance laws that the prudential regulators are responsible for enforcing among their institutions.
Do you agree that by law the CFPB is supposed to supervise these banks and ensure Americans aren't being ripped off?
It is a shared supervision for some of these laws, but primarily
But the CFPB plays an important role, right?
It does.
And it's been greatly scaled back under the Trump administration. In fact, the Trump administration has tried to fire about 1,500 employees from the CFPB, reducing the headcount by roughly 80%. So I'm very concerned about this assault on the CFPB that, in my view, has resulted in a kind of lopsided enforcement. In addition to that, the administration's latest move, it seems to me, is to humiliate the remaining bank supervisory staff. In November, CFPB Acting Director Russell Vogt announced that all CFPB examiners will be reading a, quote, humility pledge, before every examination. Chair Hill, yes or no, do FDIC examiners recite a humility pledge before any bank examination? Yes or no?
Senator,
yes or no?
We expect our examiners to treat
That's not what I asked you, sir.
all institutions with professionalism and
Sir, I
respect.
asked you a simple question. Yes or no? Do you recite a humility pledge before every bank examination?
No, Senator.
Thank you. Comptroller Gould, same question. Yes or no? Do OCC examiners recite a humility pledge before they examine a bank?
No.
Thank you. Vice Chair Bowman, same question for the Fed.
I'm not familiar with the humility pledge that you're referring to, but it's not something that our examiners are.
So the answer is no, thanks. And Chairman Hoffman, same question for the NCUA. I'm sorry, sir, can you speak into the mic?
Sorry about that. I'm not aware of anything called a humility
pledge
in our documents.
It's news to you. So keep in mind that this committee has never gotten a chance to question Acting Director Vogt on any of these radical changes he's instituted to eliminate key consumer protections. And to be clear, none of the four of you here today require examiners to recite a quote, humility pledge. You're hearing about that in real time, many of you. And so it's pretty clear to me that anyone who's watching this it's pretty clear to anyone who's watching this that this is intended to reduce the dignity, it seems to me, of the people holding these jobs, people working to protect Americans from abusive practices. And making matters worse, in January, the CFPB announced all examinations would be virtual, done entirely over a computer screen. This does not sound like an administration focused on protecting consumers. Chair Hill, yes or no? Do FDIC exams typically require an in-person component? Yes or no? I'm running out of time.
Yes, Senator.
Comptroller Gould, same question. Do OCC typically exams, do they require an in-person component?
They do, but I would note during the Biden administration with the telework status that we were not in banks as often as
during COVID, but you require an in-person component. Vice Chair Bowman, same question for the Fed.
I think there
Yes
are
or no?
some that are conducted virtually and some that are done.
Do you require an in-person component?
Not necessarily.
Chair Holtman, same question for the NCUA.
We're a mix, in-person and virtual.
So it's ironic to me in the 10 seconds that I have left, that the only bank regulator that aims to supervise a financial institution through virtual examinations is the CFPB. It's clear to me that Acting Director Vogt is working just to meet the bare minimum of the law, but certainly is not trying to abide by the spirit of the law. And in every way that he can, it seems to me he's trying to hobble the efforts of the CFPB to protect consumers. Thank you very much for your testimony.
It's mainly complaining
the acting
about
chair recognizes
in-person
herself
interviews.
for 5 minutes. Welcome. Chairman Hill, I'm going to come and visit with you about my questions personally, as opposed to using this hearing time. My questions will be related to how you're addressing the toxic work environment that was present under the previous administration at the FDIC.
I was about to say, this'll be good.
Progress with regard to
Come on,
the
Senator
manner in
Loomis,
which
make it
employees
interesting.
are being addressed and dealt with. So thank you for that. I'll see you when that time rolls around. So Vice Chair Bowman, welcome. As you know, this committee's been wrestling with market structure for digital assets for quite some time.
There we go.
And I want to focus for a minute on Section 401 of the bill, which lists digital asset-related activities that banks are permitted to engage in. So is it necessary that we have explicit authority for banks to engage in digital asset activities and have it in statute? Is that important, like for economic opportunities and safety and soundness?
I can tell you that in my experience at the Federal Reserve, that we had implemented under the previous vice chair requirements that hindered the ability for banks to engage in these kinds of activities. We've rescinded those under my leadership. So for the duration of that ability, it could be helpful, but I'd be happy to visit with you about that after I learn more about the draft.
Thank you. There are 3 states that authorize deposits in digital assets by banks, and there will be more if we can get this market structure legislation across the finish line. So I'll look forward to those conversations later. Now, Vice Chair Bowman, I want to turn to a Wall Street Journal report that you disciplined Federal Reserve Bank examiners after they engaged in unprofessional conduct. So I reviewed your job description, and it says you're responsible for managing the Division of Supervision and Regulation and its employees. So isn't it literally your job to ensure that bank examiners do their job in a professional and fair way under the law?
Yes.
Well, we learned during the last, thank you. We learned during the last administration that bank examiners have a lot of power, and they wield it. And they had guidance that stretched their ability to wield power. So I'm glad you recognize that not even bank examiners should be above the law. Now, I want to make some remarks too about the Federal Reserve's payment account proposal. I think Governor Waller has done a really good job balancing innovation with a safe, fast, and inexpensive payment system. And every time I talk about faster, cheaper, he adds safer, which I fully appreciate. And now I use all three terms when I talk about it: faster, cheaper, safer. So the Bank of England, European Central Bank, and Swiss National Bank, among other countries, have offered payment-only accounts. They offer them to eligible institutions, and they've done it for years. So for the U.S. to remain competitive in the payments space long-term, do we need the same type of structure?
Senator Lomas, that's a great question. Thank you for asking it. I would want to defer to Governor Waller and the work that he's doing to address some of the issues that have been raised with the structure for how we consider applications for master accounts. I think the way that he's working to address this is through the introduction of a potential skinny account that, and he published an RFI, a request for information, for a number of different questions that we've raised to ensure that should an account of this nature be offered, that it consists of the appropriate safeguards and guardrails to allow for it to be a successful endeavor.
Real quickly, this is being brought up because right before I actually was able to get this to go live, Senator, was it Senator Waller or Governor Waller? I'm not sure, was hammering because the Trump family had submitted for an OCC charter and wanting a Fed master account and all this stuff in regards to the Fed skinny master account. That's why they're bringing it up again like this with that kind of snide remark, because it was hammered so bad before.
Well, and I want to acknowledge that we should do this, and we should do it quickly, because we're in a race with other countries to be the digital asset capital of the world. And this is instrumental and important to that discussion. So I strongly support the Federal Reserve finalizing the payment account proposal, and I hope you do it as soon as possible. So I hope my colleagues on this committee will also support that. Thank you very much. The chair recognizes Mr. Gallego for 5 minutes.
Thank you, Madam Chair. Mr. Gold, when you're considering a bank charter application, do you meet with individuals from the company applying for this charter?
It depends, Senator. Generally speaking, certainly my OCC colleagues do on a regular basis. We really couldn't do our jobs unless we actually met with applicants.
Okay, and who do you meet normally, or who does your colleagues meet? Who do your colleagues meet with? Is it the founders, the lawyers, or someone else involved in the bank?
I believe it's all.
This, for those coming in late, this is the Senate Banking GOP meeting. Like, so when the Senate Ag Committee had their meeting back in January and things got pushed because of the snowstorm and it was never reset, that's what this meeting is that we're watching. This is the Senate Banking Committee meeting. They're discussing all of their things, including crypto. So we kind of have to wade through the boring stuff and catch the crypto stuff, if you know what I mean.
Host of folks involved, depending upon, again, the needs of the OCC professionals who are processing the application, whether they have questions, et cetera.
Okay. So do you conduct background investigations on the company's senior officers, including those at the parent company?
Senator, the procedures that we employ are detailed in our comptroller's licensing manual, which is a public document. And so, I would refer you to that for the details of exactly the process, the timeframes, the information, and the level of review that we do.
Right. So to your knowledge, though, best of your knowledge, do you do background investigation on senior officers at parent companies?
I'm not sure what you mean by background investigations on them. We certainly look into the management team and their qualifications and capabilities.
Okay. So let me read you a quote, and if there's any parents right now on C-SPAN, please maybe put Cocomelon on in the meantime. So here's the quote. You can literally sell shit in a can, wrapped in piss, covered in human skin, for $1 billion if the story's right. because people will buy it. I'm not going to question the right and the wrong of all that, end quote. Do you know who said that?
Senator, I'm not familiar with that quote.
A gentleman named Chase Hero. Do you know who that is?
Senator, again, I'm not familiar with the nature of the quote or the context or anything like that.
But do you know who I'm speaking of, who Chase Hero is?
I do not.
Okay, so Chase Hero is this gentleman here with the backward cap. And actually, probably shouldn't use the word gentleman. That's an exaggeration. He is with World Liberty Financial. He's a co-founder of World Liberty Financial. This is from their website. Is this the type of thing you would ask about in a pre-filing meeting or when you conduct interviews with applicants?
Senator, I've heard a lot of outrageous statements made by a lot of people, including from folks on your side of the aisle on a lot of things, Senator. I will just tell you that we apply our procedures in a consistent and even-handed fashion, and you're welcome to look at them yourself. I think in particular, when there's such inflamed partisan politics being played around applications at the OCC, that it is particularly important that we follow established and long-standing procedures.
Is it really like inflamed and partisan when someone says that they are going to engage in basically fraudulent activity and you're potentially going to be given the bank charter? I mean, have you had any such meetings with people of this nature, or even with this gentleman, or have any of the regulators you worked for in the past?
Senator, I'm not going to discuss my personal meetings, but I would note that my calendar has been FOIA'd, and you can take a look.
Okay, well, this gentleman seems to be involved with a lot of people that are fairly powerful, especially with a lot of things that will be going into the future, including Donald Trump, Eric Trump, Donald Trump Jr., Barron Trump. Name sounds familiar. Let's add Stephen Witkoff, Zach Witkoff, Alex Witkoff, a lot of families there. So I'd really urge you to take a serious look at the people who make up this company and can at least get your commitment to do background checks on all founders of the parent company, including Mr. Hero, if you haven't done already.
Senator, I will commit to doing what we say in our established procedures and that we should be doing.
Okay. Moving on.
And for those of you who have come in late, just quick interjection. Pretty much the only thing we've seen in regards to crypto in this banking committee to this point, if you've just come in, is they are hammering the OCC on Will-Fi's bank charter, hammering the OCC on Trump's involvement with Will-Fi. And then also there was discussion about the skinny Fed master account, and again, giving too much power to crypto companies coming in because it could spread too fast. So it's basically Democrats versus Republicans, same story that we've been hearing for over a month, with the major sticking point being World Liberty Financial and Trump to this point.
Mr. Hauptman, I'm sorry if I say that correctly.
It's all good. Hauptman is how I say it.
Hauptman, okay, thank you. Would you agree that data transparency is a cornerstone of effective financial regulation?
Data transparency?
Data transparency.
How are you defining it?
I mean, that's pretty much the definition of transparency in data that the consumer is allowed to have, and I'm sure some of the stuff that you're particularly have been able to publish. I could give you a further example. Would you agree that consumers and researchers can see how institutions are generating fee incomes, for example? That's kind of the things that people care about when trying to make decisions.
I think consumers are aware that entities have to have money coming in and out. Are you referring to the money coming in via various things?
Well, specifically talking about the NCUA, which has historically required credit unions to report their fee incomes data precisely because it serves the public interest. But last year, under your direction, NCUA stopped publicly publishing income generated by overdraft insufficient fund fees. Is there a reason why that happened?
It had never been required in 55 years of NCUA. It only existed for 1 year. So for 1 year out of 55, that existed for 4 quarters, quarterly reports, and so, to break out the income.
But what is the logic then why you changed it? So
because it was already there in the larger of total fee income. There's lots of ways to break that down further. You could break down the same as publicly traded companies. You could always break down and get more, but it was primarily done for the benefit of political benefit, to try to change those fees. You represent an area that your governments charge for like parking tickets and that kind of thing way higher than anybody does on an overdraft, which is one of the reasons people use overdraft is to pay government fees. So,
but at least, for example, when dealing with
dealing
with some of the governments, especially local governments in Arizona, actually can break down their fees. They actually have to have it on their
No,
annual
my point is,
report.
the reason somebody
But
might pay a
NCU
$30
still collects
overdraft
this
is
data,
to avoid
though.
an Arizona
The
fine.
NCU still collects this data internally.
Gentlemen's time has expired.
Yeah, the examiners
Excuse me.
can always see it.
Good
There's
old
a
pissing
vote
match
open,
again.
and have you voted, sir? I haven't. Have you voted?
Looks like everyone
You've
else
not?
is left.
Okay. Senator Also Brooks, have you voted? Okay. I'm going to call on you, and then we can wrap things up so I can go vote too. Thank you very much.
Thank you so much.
Senator Also Brooks
All
is
right, thank you.
recognized.
Now, I want to circle back to the issue of stablecoin rewards. I think many of us agree that there is a really important role for rewards and incentives to encourage stablecoin adoption. We all agree with that. We support it. We're for that. We want to encourage innovation, and that's why we've been at the table. I've been at the table all along. I think this is a really important process. Our concern is offering a bank-like product, like a bank deposit, without any of the protections or regulations that accompany that product and what that could mean for future deposit flight. First, I want to echo Senator Tillis's comments in requesting an independent analysis on future deposit flight. But in the interim, I think that we have to take these concerns, the concerns of community banks, especially seriously. So we're early in the Genius Act implementation process. And so on that note, Mr. Gould, I appreciated your comments on monitoring deposit flight. But based on your comments, any action that you take to combat possible deposit flight would only be after it has already occurred. Is that correct?
No, that's not correct. If you look in our proposal, which we released yesterday, we have hardwired a number of things into our proposal that we believe would tend to reduce the probability of deposit flight, or should it occur, result in some of those deposits.
No, I'm speaking specifically about the analysis. The analysis that you'd like to conduct would be after the deposit flight had already occurred. That's correct.
No, I was just noting that if deposit flight were to occur, I think we would notice it.
Okay.
Meaning it wouldn't occur under cover of darkness where no one would see it and fail to react to it.
All right. Now, Ms. Bowman, I led several of my colleagues in a letter requesting that the National Economic Council Director, Kevin Hassett, formally retract his suggestion that Federal Reserve staff should be, quote, disciplined for an independent report which concluded that tariffs are harming American businesses and consumers. And so I'm very concerned about the president's advisors interfering in the Fed's work and hiding economic data from the American people. Do you have any reason to dispute the Fed's report concluding that tariff prices increase, the tariff price increases are being passed down to consumers?
Senator, I appreciate the question. I would say that I'm not familiar with the report that you're referring to, but there have been a number of reports that come to different conclusions about many different subjects, including this one. I would also say that I wouldn't comment on the comments of my colleagues or those of the administration.
Okay, so you do not dispute the report, the conclusion. You agree or you disagree
I'm
with
not
the
familiar
conclusion?
with that report. I haven't read it.
Okay. Now, I want to ask a question regarding deposit insurance. Mr. Hill, it's good to see you again. And I want to just mention that the last time you were here, we spoke about deposit insurance. And as you know, I'm partnering with Senator Haggerty on bipartisan legislation to raise the deposit insurance cap for business checking accounts in a narrow, targeted manner to boost confidence among businesses and consumers. And as we solicit stakeholder feedback, we want to make sure that this is a data-driven reform that does not raise premium costs across the banking sector. When you spoke, you last testified that a targeted expansion of deposit insurance would likely not increase deposit insurance premiums on small banks, and that any increased premiums on large banks would be small or immaterial. Secretary Best indicated he agreed. And so would you just say whether or not you still agree that that a limited increase is likely not to raise premium costs?
I think what I said last time was it is possible that it would not result in increases. I think there's a few pieces to that to think about. The first piece is if the FDIC did not make any changes to its assessments, an increase in deposit insurance would not have any impact on small banks. It would have a small impact on large banks just based on the way that the current assessment formulas work. But we would also need to think about the potential impact on the reserve ratio. From just a mechanical standpoint, if you increase the amount of insured deposits in the system based on the way that the reserve ratio is currently defined, that would result in a decrease in the reserve ratio.
But a small impact is what you is possible, but a small impact. Let me just go because I have one final thing I'd like to get out. Echoing concerns from my colleagues, I just want to be super clear here. Do any of you and your 4 agencies believe that financial regulators or banks should be given the responsibility of enforcing immigration law? And if you do, can you raise your hand? All right, I'd like the record to reflect that no hands were raised.
Senator,
Well, no, actually, that was it. Thank you so much.
Sorry.
Have any further comments? Okay, thank you. So for senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Thursday, March 4th. And for our witnesses, you have 45 days from that date to submit your responses to the questions you receive for the record. I want to thank our witnesses for attending this hearing today and for providing very clear responses to the questions you received. We thank you kindly for your service to our country, and this committee is now adjourned.
All right, so that's that, but don't worry, I'm going to give you a quick recap. If you came in late, Senate Banking Committee, the main discussion point, the main topic point, let me get into my screens here, and we will continue with the normal stream. I got to go a little bit early because I stumbled across that, thought I would share it with you guys while I was watching it. But, so if you guys came in late, basically the big sticking point was, let me get out of here, blah. The big sticking point of it was Trump's involvement with World Liberty Financial, and Senator Warren, Governor Warren, whatever her freaking name is, was hammering the crap out of it. And then stablecoin yield, and then deposit flight, which from everything I heard while watching that, deposit flight's been pretty much debunked. Which is pretty amazing. So we're moving closer. They adjourned the meeting to, I believe, don't sue me, bro, but to believe, they said they were going to go vote. I believe they were voting on the Senate banking portion of the bill. So will that go through today? Probably not from what we just witnessed, but things are working, things are moving forward, and we have the absolute update on what's happening with the Clarity Act right now. We just got to see it live, but other big, major, important news completely derailed what I was originally going to stream on today. For those of you who may have joined in for the first time today, I stream every single day, Monday through Saturday at noon. I cover all crypto. I cover pretty much everything that's going on in the economy because all of it affects crypto. But my crypto that I hold particularly are XRP, Canton Network, HBAR, Chainlink, and Ondo, as well as my physical assets, gold, silver, copper, real estate, and treasuries. But we had exciting news today for my Canton folks because no one really talks about Canton, and that is Canton Network now available on Robinhood. We were actually just talking about the other day that Canton Network wasn't available yet on Robinhood, Binance, or Coinbase, and as it starts to become more available on other chains, it's naturally going to have a little bit of a ramp up. Now, why do we care about Canton? Today's stream was originally supposed to be all about the Canton Network. So why do we care about Canton Network? Well, that's because literally while everything else was bleeding, we have one thing positive. It does not follow Bitcoin. It moves to the beat of its own drum. It moves solely, it seems, on utility, already having access and doing repo transactions between the UK and the United States. Okay, so literally Canton Network is the only thing that's moving up. while everything else is moving down. We've been talking about it since the end of December, beginning of January, when I got rid of all of my Bitcoin. I had officially fully cycled out of Bitcoin and started purchasing Canton Network in December, moving Bitcoin out of my 5 pillars and moving Canton into my 5 pillars. As far as my 5 pillars of crypto, because I try to really focus on building out the infrastructure, right? Building out utility. I try to look at things that I can track, follow for the long view, right? Over the next 5 years, 10 years from now. So today is all about Canton. Today is all about Canton for my Canton Network friends. Thank you everyone who's joined. Make sure you're subscribed. Make sure you hit the like button. Make sure you engage in the chat, because I do talk to every single person in every single stream, because it's about a long view community, a group of people trying to look at crypto in a different way, right? As opposed to the hype, hopium, and pump and dump schemes that have been plaguing the crypto industry for the last 5 to 10 years. So try to build a long view perspective to set us up for building something in the future. So Canton Network, I got some information for you guys on the Canton Network. Let me fix everything. And don't worry, I see you guys signing off in the chat. I see you talking. Don't worry, I'm going to come back to this point as I get through the Canton information, and we'll keep the chat rolling, okay? Appreciate everyone taking your time to be here. Let's roll on with the stream. So, looking at what's happening with Canton Network. Well, I just announced that it is now live on Robinhood, and we can see it responding to that. It's up 10% today, moving up to as high today as 1750, or actually earlier it looks like as, oh, this is for the month, hang on, to the day. Moving up as high as 17.5 today, up 10% with the news of the announcement on Robinhood. There's going to be a lot of people picking this up now as soon as it goes to Binance, Coinbase, and so on. So it's up 2 spots to 14th in market cap today. Again, when we first started tracking this at the beginning of January, it was ranked 25th in market cap. So it's up 11 spots since the beginning of January, and it's only accelerating. So why else is this important? Well, we had the announcement that they are live on Robinhood, but if you didn't catch the stream the last couple of days, let me pull up here. Let me go to my bookmarks, and we're going to look up Canton Network. Canton. I don't want to look at that. I want to look at the bookmarks. Search specifically the bookmarks for Canton so I can get you all of the news, because they have 2 major partnerships that were announced that a lot of people just glossed over. First one being Chainlink. Just in, Canton Network adopts Chainlink data and interoperability standards to unlock institutional tokenization. Again, Canton and Chainlink are both part of my 5 pillars. But wait, there's more. They had more information in regards to partnerships going with Canton Network. There's one more, one that a lot of people have really, really liked to talk about, and that is Zebec. We're partnering with Lattice Finance, the first neobank built on Canton Network. This marks Zebec's entry into the Canton ecosystem, bringing real-time payments and card infrastructure on institutional-grade blockchain. This was announced, again, 2 days before Zebec's all-in-one app went live. So now we have Zebec partnered into the Canton Network ecosystem. We have Chainlink partnered into the Canton Network ecosystem, and now Canton live on Robinhood. Immediately to go forth, a new token announced on Canton, the Hecto token, coming soon, not available yet. What it does, I don't know. We don't have any information on it yet, so we have to do our research. Again, we're here for the long view. We don't invest with emotion. We dollar cost average in over time. But I do present you all of the news every single day, Monday through Saturday at noon. Make sure you're subscribed. Make sure you hit your alerts so you guys are up to date on all of the information coming forward. CC is extremely undervalued. The market has not priced in what's coming yet. That's where the opportunity lives. Your future self is going to thank you for getting in early. Now, when we talk about crypto and getting in early and all of those things in general, it's important to actually take a step back and remember we're at the infancy stage of blockchain technology and of cryptocurrency. I mean, to give you an example, Canton Network's market cap is only $6 billion versus global stocks, the market cap is $143 trillion. Okay, we're not even up to 0.1% of the value that's available out there to come onto these blockchains. We are that early in this process. It is just starting this year. We've heard it from people from Ripple. We've heard it from people like Canton that 2026 is going to be the year of institutional adoption at scale. What does that mean for price? That's what everyone cares about, is what's going to happen with price. And as I'm sure I have several new people to stream, if you are new to stream, we do look at price every single day, because even though we are here for the long view, you have to know where you are so you know where you're going, right? We have, history will tell you a lot of things. So if you've been in the streams, and we were trying yesterday after the Jane Street debacle, trying to figure out if this was going to be a continued pump or if it was another pump fake. So I said I want to see it go past 70,000 with volume. If that doesn't happen, I'm not buying it. Well, what happened yesterday during that run up? We got all the way up to $70,031 before it tapped and came right back down and continued on with a downtrend back to 66,000. I'm still waiting to see what happens. I don't want this to happen, but I believe this is going to fall down to 60K, and it's either going to test 60K and bounce and get a nice relief bounce, or it's going to fall through 60K and continue down to 55, 50K. Why do I believe this? For those of you who may not have been here before, it's because of what's happening in the overall economy, right? With credit card debt being the highest it's ever been in our country, with credit card delinquencies being the highest they've been in our country, with auto loan delinquencies being the highest they've been in our country, right? Even since early 90s at a minimum, right? So yeah, we have good stock market data, but when we look and peek at our neighbors, that's not going to last long, because when people stop paying their credit card debts, when people stop paying their car loans, when people stop paying their student loans, the next thing to go is their mortgages. And right now, housing is at its most unaffordable time and most unaffordable point in history. And the amount of homes, as far as impending sales now, are at their lowest amount in history. So 6 months ago, a year ago, you were having bidding wars for houses, and now houses are sitting in the market and people are screaming, please buy my house, because they can't pay their bills. That'll show up in private credit. When people can't pay their bills, the banks start to hurt. And I think that's where we're getting to. So again, I'm here for the long view of what crypto is going to be, but I'm not going to ignore the signs of what our overall economy is looking at right now. That's what the long view is about. That's what this channel is about. We're going to understand crypto. I love crypto. I love it. I am bullish on crypto to the moon and beyond, but we got to contend with what's happening in the real world. We can't put the blinders on and move into one narrow scope of what's going on with one blockchain. That's how we will get wrecked, and that's how we will lose all of our money. And again, nothing in these streams is ever financial advice. I am not a financial advisor. You should always do your own research. Investing comes with the risk of loss, regardless of what it is, whether it's crypto or anything else. And as most of you have learned by now, everyone can lose money. We can see it across the board, highlighted in red. But so that's what I really wanted to talk to you guys about right now, is that while Canton Network is climbing, the rest of the market is bleeding, and we are getting more and more positive news for not only Canton's growth and adoption as far as people understanding about it, people getting word of it with it now going live on Robinhood, but also interoperability, working with Zebek and Chainlink, and continued ramp ups with the DTCC doing its first intraday repo yesterday with the UK, right? So this is only going to ramp up. It's only going to continue. I couldn't be higher on Canton. It is my number 2 token, but I'm all about building out for infrastructure. So I appreciate everyone being here. Let's hop into the chat. Let's keep the chat rolling. We're going to keep it going as long as people want to stay here, and we can talk more about the Clarity Act. How many people do we have in the stream right now? Hopefully it's still rolling. It's dropped down to 45. A lot of people were here just for what was going on in the Senate, but that's okay. Let's see what the chat has to say, and we'll see what else is going on today after we get through everything else with CC and the chat. So hopefully everyone's having a great Thursday. You got the information you wanted out of the Senate meeting. Let's freaking go XRP. Okay, you want some XRP info, Matt? Everyone loves XRP info. I'm an XRP fan myself, as you guys know. I've got some XRP info for you as well. I just hadn't gotten to it yet. Let me pull up that screen for you. Let's see. There we go. So when we're looking at the account activity or the transaction activity, we have talked a lot about account set activity. For those of you who don't know what that is, that's right down here. Accounts coming online, getting ready to use the XRP ledger has spiked over the last 4 months, indicating institutional integration into the XRPL, because this is more than the entire history of the ledger combined, and then some, with spikes even as high as 68,000. We're starting to see that translate into payments activity on the XRP ledger, with it ramping up since Christmas to over 2 million, continuing to hold 1.5 million, and already, well, this is from last night. Let me ramp it. Let me refresh and see where we're actually at today. So as far as transactions today, it's currently sitting at 1.2 million today. We got up to 1.5 million yesterday. So it's still ramping up. We talked about the account set, but new feature, new stat. Hey, AMM deposits, highest spike in the XRPL's history this week on the 23rd at 14,000. And we're also seeing AMM withdrawals spiking up to their highest. This is activity on the XRP ledger. I couldn't be more bullish about what's happening with XRP, what's happening with Canton, what's happening with HBAR's partnership with FedEx recently, not to mention the announcement that BlackRock is working with Hedera. So, I mean, there's so much information. Like, this is just ramping up faster and faster and faster. I could not be more bullish long term on the infrastructure pieces. But that's why I hold all 5, right? And that's why I also hold the real world stuff: gold, silver, copper, real estate, treasuries. And honestly, a new note on treasuries while I'm talking here, a new note on treasuries is that, remember, every time stablecoins are minted, they're going to be buying treasuries to back them. Food for thought. I mean, because stablecoins are backed in U.S. treasuries 1-to-1. Doesn't hurt to hold treasuries if you know there's going to be a constant supply of people buying them moving forward. Just saying. I mean, it's not a very high increase, but it's the best guaranteed increase you're going to get. As far as if you're worried about a recession and safety and those things. Real quickly, though, I'll be right back in 15 seconds. Hold tight for me. I'm coming back to the chat. I'll be right back, though. All right, sorry about that. Let me take a look here. Let's see. Let's hop into the chat. Oh, my phone. Oh, yeah. So the the stream was doing great today. So Matt Grimes just subscribed. I thought that was a new name. If you just subscribed, where are you from? I like to know where everyone's from. Again, we stream every day, Monday through Saturday at noon Central, and cover everything. We are here for the long view. XRPL is on the Proton Webentthal wallet. Look at Marshall. Okay. His office is right down the street from Ripple's. Okay, cool deal. Also, though, for those of you who hold XRP, my XRP fans, one-click DeFi is now available on the Xamin wallet, paying anywhere between 2.9 to 3.3% to stake your XRP. Not financial advice. I don't have a Xamin wallet. I don't have it staked. I'm not a partner, but it is available because I was excited for one-click DeFi. Me personally, I was excited for one-click DeFi. Bull trap, not enough volume. I completely agree. There's not a lot of volume pushing up the price of Bitcoin right now. And that is going to, it's just not going to hold. It's already fallen back down to 66. So until it pushed through 70, I wasn't buying it. I wasn't buying what they were selling. I was shorting what they were selling, and I got caught on a bad leg, but I did catch some of it back. So I'm still even on this move, if you will. But I wanted to see it. I tried to get shorts right here at 69.5 and just missed. I couldn't do it fast enough because this spike was so fast. And again, I do shorts and I do short and long on futures on Bitcoin. I do it during the stream sometimes if I see a good setup, but I literally just do it for fun. It's not anything major. It's entertainment, if nothing else. It's kind of like sports betting or anything else. I do technical analysis, and it keeps me entertained, gives me something to do. Let's hop back into the chat, though, for you guys here. We'll leave Bitcoin up so people can look at it if you want. Interest rates are way too high, and greed is at an all-time high. It's going to be painful when it does snap. A lot of people, things cannot go up forever. But as long as they continue printing, prices will go up. So we have to look and see what they're doing with quantitative easing, with the debt rotation, and all of those things. The entire crypto market is built on the U.S. economy. That's just how it goes, unfortunately. It's a clever way to ensure the U.S. continues to sell bonds. Absolutely. Yeah, if every single stablecoin has to be backed 1-to-1 with U.S. treasuries, that means every time stablecoins are minted, treasuries are bought. So honestly, that's why I put a few $1,000s in treasuries for safekeeping, just in case everything goes to hell. If everything goes to hell, having a little bit of a cash reserve, that's my savings account. U.S. treasuries is my savings account. That's the emergency fund. It's highly liquid. It gives better returns than a savings account. And yeah, it's a hedge in case something tragic happens, and it's a good cash reserve that's still not being completely destroyed by inflation, right? So I basically use treasuries as a savings account. It's a good place to hoard cash if you need it liquid, right? Liquidity is important, right? The ability to get in and out of something fast or quickly. That is what liquidity is. The ability to move money around. So a lot of people want to have a savings account because they're afraid they need cash on hand or whatever. I'm like, anything you need cash for in a week, you can cover with a credit card usually. And anything beyond that, as long as you have it in treasuries or something that's easily liquid like that, you can have that money in a week or two. I don't like to hold a lot of cash, but I'm also of the mind of the debasement trade, right? Which means the more they print, the more prices go up. And it's not because things are getting more expensive, it's because the dollar is becoming worth less. The dollar is worthless. It's fake money. It says the only reason it has value is because the government says it does. It says note on the paper. But that's just me. That's my personal way of thinking. Everyone has their own way. But I've been streaming now, ladies and gentlemen, for 3 hours. I've covered the Canton Network. I'm not going to stream again today. So I will be back on again tomorrow at noon. But for those of you who just now found the stream, I appreciate you being here. Make sure you hit subscribe. Make sure you hit the like button. Join us tomorrow at noon and every day after that, all right? Later. We'll see you guys soon.